welcome everyone to the panel. I'm Trevor. I am the governance lead at Gauntlet, and we're going to be talking about navigating governance challenges with oracles. So I think to start, we can just go down the line and do some introductions. Stu, do you want to start and kick us off, and we'll work our way down?
Yeah, sure. So my name is Stu. I'm a co-founder and CEO at StableLab. I'm also BD lead for Sky. So for StableLab, we do different aspects of governance, whether it's through being a delegate or helping as a working group. And then there's also a lot of areas where we work with oracles, whether that's through proposals or collaborations. So happy to be here.
Hello, I'm Carlos. I'm CTO at Aragon. Previously, I co-founded Gesser, a prediction markets that got acquired by Gemini. And at Aragon, I help lead in the research and development of new products.
Hey everybody, I'm Vaughn McKenzie-Landell. I'm one of the co-founders of Butter. We work on a product called conditional funding markets. It's an implementation of a futarchy that runs over a treasury. We're obviously very interested in governance and making improvements, and one of the things that we think people should be doing is not voting and instead betting.
Hi, I'm Edmund Edgar. I built the first smart contract oracle reality keys.
Is it working?
It's working. I don't know. Can you hear me?
It's like slightly.
Is there a button? So I built the first smart contract oracle reality keys way back when. Now I run Reality.eth, which is an optimistic oracle used by things like the Omen prediction market and some successors to that, and then for governance in things like snapshot integration, stuff like that.
Awesome, great. Well, nice to meet and re-meet all of you guys. Excited to chat about oracles. So I think traditionally, when we think about oracles, we've thought about very objective pieces of data, prices of assets, and leveraging those to enable new use cases with smart contracts. Governance can be a bit different, right? Where we start to get into more subjective data streams, we start to get less into specific pieces of information and maybe binary, maybe objective data. Carlos, I want to hear from you as the CTO of Aragon, one of the oldest, the OG in DAO tooling space, and now you guys are launching new protocols. So I want to hear about how you guys think about oracles and how we might be able to consider leveraging more sophisticated data inputs from oracles to inform governance design and governance tooling.
At the end, it's like bringing information from Web 2 to Web 3. And something that happens quite often is that DAOs want to ensure that the participants are legitimate or like people that they trust or that have provided some value. So identity systems is something that is quite often requested, at least on certain parts. Maybe not for like the pure token voting section of the DAO, but like maybe for like the security or things like that, or like for those that want to claim some treasury or they want to make some requests of funds. Normally, you are required to do KYC of some level and prove that. For example, one of the most OG DAOs, Nouns, put a proposal a week ago to start doing that for everyone requesting funds, and everyone requests funds in there. So like it's happening to many DAOs more and more often. Another thing that is quite common for oracles is doing permissions on the proposals. So like you create your DAO and you put a permission to make sure that no part of the treasury goes to unsecured protocols. So for example, you can say, I allow any proposal to be created, but at the end, whenever it gets to execute, you have a permission that says, if this protocol that I'm putting my money in has less than 50 million TVL, prevent that. And then you can do that with price oracles.
Awesome, so kind of validation of social norms on chain, essentially.
Yeah.
Awesome. Yeah, I think at StableLab, obviously you guys are involved with governance at many of the leading DAOs in the space. When you, as we all know, being involved with governance, conflict and conflict resolution is constant. Kind of touching off the identity piece, how do you see a role for oracles kind of in the post-consensus stage holding, people, grantees accountable, or any other use case where you think oracles could potentially make more robust on-chain operations?
Yeah, and that's a very good point. And of course, it's important that doing too much governance is, bad for your mental health. So I think there's a healthy dose on it. But going back to this, actually, a lot of decisions are dependent on this, because if you think about it, the idea of oracle is like source of truth, and then we have seen how it can be very important. So even actually going beyond like traditional, like so Web3 governance, right? Like for example, if you look at poly market, and there are a lot of people are, let's say, betting on what's going to happen with the election and the others, right? But at the end of the day, like if there were any disputes, then actually has to go through different kind of oracle, right? So they will use UMA, and then out of it, they have different, their own delegates to decide what does it mean. And the thing is, like, because anybody can technically make a market, sometimes the wording can be very, very vague. I remember there was one about, for example, when there's a submarine, this went down, was it being found, or is it just a parts, right? It's the question about if would they find the body? Does it matter if it's just arm? Is the technical body, right? So it's like, it can be a bit nerdy, but at the same time, it is very important, and also a lot of people depend on it. Now, going back to more traditional Web3 governance, as you mentioned, like, did the grantee, for example, achieve this KPI or this kind of goals? And they can be sometimes very tricky. And then the aspect of oracle can help with both from the Web 2 into Web 3, right? So it can be something that's outside, like for example, hey, like we want to grow these users. Well, what is user? And if you say, well, this user, we want to define as, let's say, this social media or others. Well, that data has to come from somewhere, right? So that itself is oracle. Or it can be also, kind of conditional, right? There have been a lot of attempts to make it like, can we have it that like this kind of, let's say, grants or others, or only unlocked if certain conditions are met? And we, for example, right now start with the on-chain aspects, but then some, I would say, experiments have been doing like, okay, what if we can do it based on like Web 2 and they connect it, right? So funds only get unlocked if certain conditions, let's say, meeting users, even price, users or something, right? Can be met.
Awesome, yeah. Touching on the idea of funds being unlocked only under certain conditions, I think oracles began to open up entirely new ways for us to even unlock funds in the first place. And I know Vaughn, Butter's been having a moment here at DevCon, I think, kind of pushing forward, and along with Polymarket and the election, this idea of prediction markets and how oracles enable kind of the opening up of new ways to value whether a proposal should or shouldn't pass. I'm curious if you can kind of introduce this idea and talk about some of the considerations that oracles play in prediction markets for governance.
Absolutely. I've been waiting for you to tee me up. I feel kind of like front ran the prediction markets thing. I'm going to try and add to it. I think he gave like a really good explanation already. But if you think about like prediction markets, the idea is you're just trying to predict the future. You're probabilistically going to end up in one world where something happened, candidate A won, or another world where a different candidate won, right, candidate B. You can only end up in one of these two worlds, and there's just a probability you're going to be there. And prediction markets are just trying to price the event that a contract expires in that market and it's worth some amount of money. And you can take the price of that contract and use the probability of that contract to kind of come up with use the price of that contract to come up with a probability. And prediction markets obviously require some resolution. And the resolution comes from an oracle. So at the moment, Polymarket makes use of UMA. And I think most people would know how UMA works. So I probably won't explain that. But the idea is that there is some truth that's happened in the market, which the blockchain does not know about. And then the UMA is going to bring that information online. And this is obviously very, very important. Otherwise, you can't settle these markets. There's actually another prediction market application called Manifold. It's a play money market. We set up a market like yesterday as part of like a governance event, and it was to just try and predict the bar tab. And then the question at the end is like, we just resolved the market at the end. So we went in and we just said, that one's resolved. That doesn't map to any reality. We've just come up with the answer. It could be right, it could be wrong, and you can't verify it. So you have a huge problem of making sure that you actually get back the truth. I think the idea of the people being like in the submarine and where they found, like, did something happen to them, there's some truth there, but even if we can't figure out what the truth is, it's going to be very impossible for us to try and actually observe some truth and then bring that on chain. And so this Oracle like problem is like fairly vast. It doesn't just include like, can we get the information on chain? It's how do we define the truth? Who is responsible for taking that truth and bringing it on chain? What's the mechanism by which that they aggregate the information and bring it on chain? Who do you trust? And so I think that's like the overall like landscape for oracles. And what we're using them for is we run conditional funding markets. These are, as I said, conditional markets. So they take a probability that we make a decision to do A or B, and A or B is funding something or funding something else. We take the probability that we get some particular outcome that we want, like GDP goes up by 20%, and we just try and predict the probability of that happening if we make decision A or decision B. And we use that to actually make the decision. The market implements the decision. So obviously, if you can manipulate the oracle at the very end, you can manipulate the payoff you get. And if we're actually allocating funding, you have maybe this incentives mismatch where you have a huge amount of money that you're allocating, say $10 million, and then you have a tiny 10,000 liquidity market. So there's a huge incentive to manipulate this market with like $10,000 in order to get $10 million allocated to you.
Yeah, absolutely. And I think, we start to get in interesting areas with subjective oracles, right? Where you end up in a place that potentially you have a DAO vote to decide the oracle for a DAO vote, which is kind of a endless cycle there. So I'm excited to hear, Edmund, what, as kind of a Reality.eth being an OG in the Oracle space, kind of having seen the evolution since the beginning, what makes oracles so hard to kind of decentralize from a technical perspective, and especially maybe with the context of kind of these subjective oracles? Do you have any insights into how we can get to a better place in Oracle design?
So I think that the fundamental problem we have is kind of something that we inflicted on ourselves. I'm going to talk about the Ethereum space, but I think this is applicable to everything else. There is one secure oracle in Ethereum, and that is that the Ethereum layer is an oracle for timestamping of transactions. And that oracle is secure because even if you got 51% of the stake of Ethereum, and you did a massive reorg that undid transactions from a year ago, in theory you could steal some ungodly amount of money doing that. But if you did it, then we would fork the chain and we would use a different fork where your stake was deleted. And that works because fundamentally what we've got is a social system, not a purely crypto-economic system. If you're trying to do oracle settlement with just crypto-economics or with just like token holder voting, then the absolute best you can do is you can secure something like half the market cap of your token vote. People were looking at Polymarket and UMA and looking at the amount staked on Polymarket and the market cap of UMA and saying this is insecure. And it turned out that actually, no, it's not secure because there's an admin key in Polymarket and they can just undo it. But it's turning out that actually a lot of the systems that we're seeing are basically faking the decentralization because there's just this very hard limit on how much you can actually secure. So the only way we can fix this is if we're prepared to make all of the tokens that we're using, all of that stuff, everything else also forkable based on social consensus.
It reminds me a lot in early 2016 when Gnosis was a prediction market. I remember they had in the the limits of the human oracle something they called the ultimate oracle, which was basically forking Ethereum. Sort of like, if people don't get an agreement on this specific prediction, we'll just fork Ethereum. And for me, it was like nuts. But at the end, it's like what you're saying, like there is no other way. I'm not saying that works. I'm just saying that there is no other way if there is disputes after dispute after dispute.
Awesome. To kind of switch perspectives here a little bit and move on from prediction markets for a second, I'm curious, one of the other clear use cases, I think, for oracles that we've seen is cross-chain governance. And I'm curious from Aragon's perspective, are you guys building towards cross-chain governance? And maybe you can hop in on this. I know you're involved as well, but maybe we can kick off the discussion about what oracles unlock potentially for cross-chain governance and what are some of the concerns there?
I mean, we obviously are moving in that direction, and we have a couple products that do that. And the reason is very simple, like projects are going multi-chain. So that you need to be able to govern those protocols across different chains. The problem is like how you do that. And there are many ways, and there are many, like it depends on the project. So for example, it's not the same building this solution for Uniswap, where the requirements are huge, than for a small project that cannot afford a huge payment on several bridges. Our approach, to be fair, is try to not to rely too much on bridges and try to go more on the CK layer. So like going with CK proof that you hold tokens across several chains, that's trying to avoid potential mistakes in there. I would say that for us at least, as long as you can use CK messages or CK proofs, you go that route. If for whatever reason you cannot, because it's like from one L1 to another L1, or like you cannot prove across several chains, then bridges are super useful. And with the clients that we've done that, at the end, well, we've done it with layer 0, but like, doesn't really matter. What it matters, like, you have to ask that DAO is like, what are the security requirements for you? Like, who are you going to trust? Because at some point you're going to trust someone, or like a few people. So like, you have to pick smart decisions on like, what is the people that you want to trust for these message passing. Normally it's them, us, the project, the bridge that they're using, and some other party. I would say that's safe enough for most DAOs until you get to like a big, high stakes DAOs, and you might want to do like bridge aggregations and things like that.
Yeah, I mean, I must admit that I'm a bit skeptical about cross-chain governance. Not only because I'm Korean, so we're skeptical in general, but also the fact that like we have seen some of the DAOs try to implement it, and it's quite difficult. Like one of the examples that we've been seeing, I think, is a Wormhole that tried to implement it. And of course, like we appreciate their enthusiasm, but we have seen that actually the delegation amounts hasn't been that much. And then also, even for some of, let's say, they're in transition, I think the YDX is a good example where their governance used to be on ETH and then that moved to their main. But then there are a lot of people who just don't bother even moving, right? So we see the governance is not as flexible or not as like, I would say, people are interested in. So that like, for example, even if you, and this was something that we heard on some of the multi-chain protocols was that, hey, like on ETH is pretty big, so let's say open it up on different chains. But then I was like, why? Like, because you can imagine that even from the delegate perspective, let's say that just doing on an ETH itself is pretty stressful and it's bad for your mental health. So now you also have to suffer the same on, let's say, Polygon and others. Like, in a way, it also creates a friction that I think that we don't really talk about, because we like to say that, well, the users will be very different on, let's say, Polygon or Optimism, and that might be true, but in terms of governance, there are not that many players, and for like the governance player to be like, hey, I'm going to vote on both ETH and Polygon and less others, it's actually very unlikely. That it's more likely that it will be the same actor. It won't be like a very unique users usually. So, of course, this is not just talking about the Oracle side, but I'm just saying the cross-chain governance, I think, needs to have more smooth transition as well as smooth interactions.
Awesome. So in terms of low-hanging fruit, for oracles and some things that we can optimize today in governance with oracles. This is kind of an open question to any of you guys. I'd love to hear what you think is not being designed in the DAO space that we could potentially leverage oracles for, maybe more on the objective side than the subjective side, if that's easier.
I would start with permissions. So right now it's quite, like, if you participate heavily in like smaller DAOs especially, it happens quite often that people create proposals that are not going to succeed. And then they try to execute it, or like they shouldn't at least. And right now, like, they just go through and fail or do things that are just plainly wrong, and you wouldn't expect that. So it would be nice if you would be able to attach like a tenderly execution, like in a condition sort of to say like, this is going to execute and it's actually going to do the things that you expect it to do. There are many failures right now in execution in DAOs that should be prevented like in the coming years. And I think there is no way to do it on chain, because like the execution on chain is not going to be validated by itself. So at the end you have to do it more I wouldn't say subjectively, but like closer to that.
Yeah, that makes sense. I think I know from the Gauntlet side, we're also looking at the operational side of governance, right? So just automation purely. Instead of having capital go to councils and a bunch of multi-sig signing things, how can we leverage oracles to potentially do token conversion automatically upon a proposal passing, right? Have kind of non-custodial vaults oversee it, but leveraging Oracle, DeFi oracles to, efficiently swap out of assets into other assets, protocol-owned liquidity, kind of all these managerial tasks that DAOs have, operating those autonomously and more efficiently. I'm curious if you have any thoughts on that side. Like, do you think DAOs are misusing or not using smart contracts enough, kind of post-execution?
So I think there are two elements to it, and one of them is, as you mentioned, like a lot of DAOs, especially in DeFi, they use Oracle quite extensively, right? And then for now, they've been using it more for the DeFi aspect, like for example, collateral. But there's definitely more that can be done. So continue with this the first part about some of those data that could be organized, I would say. Because for now, there are like many different aspects, whether that's due to analytics or others. But in order to get the source of truth, like community kind of has to calculate themselves, and then there can be some disputes over it. So having it like something that's objective, that people can easily use it, also makes it much easier for people to build on top of it. I think that we're already seeing some of those aspects with some of the grantees where, I remember for Compound as well, it's like they sometimes open up for more opportunities so that people can build on those type of like, let's say not only like price and others, but about different data and then parameters, right? So I think that also helps to have others to build on top of it, right? Because then now you have more data points that are verifiable. And then the second point, which is as Vaughn mentioned, we think that it'll be big, but hasn't been explored a lot, is the aspect of both also the off-chain side and also the prediction side. And I think the prediction side maybe requires a bit more time, and I think that we are still in very untested territory at the moment in terms of it. But in terms of aspects where you can bring some of the off-chain data into it that DAO can use, can be very big, right? Like even if it's as simple as, for example, let's say we have a conference like this, or like we know how much DAO has spent on less events, but we actually don't have a numbers. And if there are like objective way to put that into numbers, then we can see, oh, okay, so they hosted this event, spent this much, and then has seen growth in this attendance or others, right? Like it's very, if you think of a simple thing, but it has been something that people have been doing a lot, because I don't think that they realize that that's something that's possible. And then that can be part of the metrics for grants and others, as we mentioned.
I just add one thing to that. I think if you think about governance as being this process by which we try to limit the set of actions that are permissible, and we have a system which we use called token voting to do that, we're basically constantly asking token voters, we're just polling them, we're saying, should we do this? Should we take this course of action or not? Right? Is this in the realm of permissible activities? And like the token voters are just giving us that information, and they're using their tokens to give us that information. And I think that you end up with a token-weighted average of everyone's opinions. And within that, one of the things you're getting, one of the like jobs that's being like transmuted through this like system is like just the job of an oracle. It's just bringing information on chain. And so there is a question that says, what if you had like very specific oracles that, like for example, one of the things that's happening is they're also giving you some information about reputation, right? They're signaling something about some particular group who's come to the DAO that they think should like be incorporated in some way, or like we should be giving some kind of money to. And that's just like an oracle could give you that, like something that's reporting on reputation, for example, could automatically remove that. And so if you think about the shape of all the decision space of all the things that token voters currently do, and just trying to find better systems to do that, you can definitely see a real use for oracles. I think the problem is just that it's still probably cheaper, at least today, to just have token voters turn up and just do that job. I think that designing a perfect oracle to do the jobs is just really hard and quite expensive. I'm sure you know that's still quite hard.
Yeah, absolutely agree.
Something to add on that, and it's something that I've been seeing more and more over the last quarter, is that DAOs are not just proposals where users vote yes or no. And the DAOs that are only doing that I don't think they're like, I think they will have to move away from only doing token voting on yes or no, and like exploring more ideas for different kind of purposes. So like if you want to do a protocol upgrade, yeah, sure, do that. But like if you want to distribute rewards or whatever, like there are gauges or prediction markets that are going to do that way more efficiently than pure token voting. And those things that are being explored right now, I think are going to be quite key in the upcoming year. I think prediction markets do play a big role in that, gauges as well. And I do think that is going to be one of the biggest innovations for 2025 for DAOs.
Yeah, we'll see. I think that we're going to see a lot of people losing more money on betting. So it'll be a good way for them to continue working in governance, way to stay. I actually already lost 70% when we tried the Uniswap betting, so I already know my place.
It's a lesson everyone learns at some point, how to lose money, right? Speaking of saving money, Edmund, I saw you nod and said you'd agreed pretty confidently that oracles were too expensive to build potentially for kind of these off cases. I'm curious, what's the path towards making it cheaper to enable these kinds of oracles? Is there a path, or should we really be looking towards more aggressive alternative solutions?
I mean, for subjective stuff, I guess it's not too bad. In that, I mean, optimistic oracles kind of solve the problem, right? I mean, with the Reality.eth game, basically you only need two people involved in settling a question. You need somebody to answer the question, and then you need somebody paying attention who would realize if they're lying. And beyond that, unless you need to escalate, you're generally going to be okay. So just in terms of pure cost, it's generally not too bad. But I think when you get to governance decisions, you have a lot of things that just have a lot of points of view and involve ultimately a lot of kind of social cost.
Yeah. I remember it back in the day with Edgar, there was one proposal that stated what if green token was OG token was listed on CoinMarketCap by that date or not. And just by the way the title was written in the prediction market, they didn't know how to resolve it. Because like the token was listed by that date, but the name of the title was like, if that token /USD, so that is kind of like the pair, existed or not. So like everyone got super confused, and at the end they couldn't come up with a solution for that, and they just decided the market was going to die. It's like I would say it's not only that it's the cost of it, it's that it's complicated for certain types of things. And I think we have been getting better and better, and thanks to Polymarket and other players in the ecosystem, but there is still a lot to learn to make prediction markets reliable, or like human oracles to make reliable over time.
Yeah, that's kind of one thing I've been thinking about as well. Just the further you go into subjective, the more room for error there is, and that's really where a lot of the problems start in the first place, right? Like we're kind of just making someone else make the decision in some cases, potentially. Another part of this is kind of the crypto economic security of prediction markets. Vaughn, one thing that came to mind was potentially prediction markets for DAOs could have kind of a small market, potentially. Like if there's a $2 million grant and there's $200,000 in the prediction market, it essentially is quite valuable for the person asking the grant to put in 200,000 more to swing the vote and put that into their operational cost for their $2 million grant. I'm curious how you think about that and what kind of responses, safeguards you see for that.
Yeah, I think there's two ways of thinking about this. One is it really depends on the way you set up the markets. So let's say we set up the market to say we want to distribute some amount of funding, and that's going to be used by whoever receives it to produce some metric. So technically, any money that they use, right, as a cost against that amount of money in order to manipulate the market is money they no longer have to produce the metric. So anybody who takes that position, which obviously would be this project, they take the position, they buy the ES tokens, they boost the price, they make the decision. What's going to happen is they're going to end up with like less money. And then the chances are they're not going to achieve the metric, right? They're reducing their ability to achieve the metric, and then they're going to probably lose on the position they've taken, which may be just the cost. And so this is one component. So like the design of the markets and economics will need to actually be thought through to make sure that you don't have these huge incentive mismatches. But ultimately, you really want to have small amounts of money, small liquidity markets, moving as much money as possible, right? Otherwise, you really want some efficiency gain on the capital. So the other thing you have, which goes back to your point, is you just have reputation. So if a team is in the market and they are doing this manipulation and they get the money and then they don't achieve the goal, then you as somebody who bets in those markets should say, I adjust down my probability that this team is a good team and I will not bet on them in the future. So this is the second part. Reputation is likely to keep people in check. It can only go so far because you do have people who are like anons and I think that's going to be difficult, but this is another component. The third one is just kind of the standard manipulation thing. And this is the thing that Robin Hanson always says. This is the one product we have, right? Or not one, but it's a great technology because manipulators make the product better. So if you have someone come in and try and move the price and it doesn't actually map to reality, there's genuinely an incentive for everybody else to come into the market and just take the money, right? So every single time they try to push the price up, there's an incentive to try and push the price back to where it should be. And so one of the things you can also do with the design of your decision markets, specifically not necessarily pure prediction markets, is you can have this, when you make your decision, you just basically have like a TWAP over a particular period of time. And if the price moves too much in that period, you just introduce a delay. So what happens is, as soon as someone starts trying to move the price to get the decision to go in their favor, they extend the deadline and they create a long period of time for someone to try and correct them back. So what that's doing is it's just bleeding that company dry as they try and keep spending money. And so the thing I would say is there's the theory of running prediction markets and decision markets, and then there's actually running in them and all the horrible, messy stuff you have to do to make them work. And I think we have yet to discover exactly what those things will be, but that's the stuff to explore. I think there's those three kind of main points.
I wanted to add something on that. There is, I can't remember which company in Japan. They did a prediction market. I'm talking not even a Web 2 company, like a Web 0 company. They did a prediction market on how is one of their products going to sell that year. And the market said that it was going to be bad. So they took that as an oracle of information and feed that into their product decisions. And it resulted that the mismatch between what they expected and what the market was saying, it was quite big. So they adapted that, and it was a great year for them. So it actually worked out. So going more meta in this panel, I would say that prediction markets are sort of an oracle and not just consume oracles. They can feed information to the DAO on what to do that year or what to do for the next product.
Yeah, and what's really interesting in these corporate markets is that a lot of the time the information about how the product is going to do is actually there in the organization, but it's not correctly getting reported to the right place in the organization. So in theory, these corporate prediction markets really should be able to leverage all that information that is already in an organization. I've been a bit disappointed by how there have been a few startups have tried to do this. I'm not quite sure why they haven't managed to pull it off. But it's really something I'm interested in seeing working.
Yeah, I mean, I'm skeptical, and I know that if I drink a beer, I'm usually more friendly, so don't worry. But
He's not skeptical, he's bullish.
Yeah, so people who know me know that when I say skeptical, that means it's not bad, right? But at the same time, I do think there's definitely a lot of aspects that need to be and actually I think Vaughn said a great point where you're actually the system, it's okay to have a system where people potentially manipulate it because if you can fix it, right? Because there's also a reason why there's a bug bounty and others, right? If people exploit it and also you basically set the limit so that you don't have just one bet that basically bankrupt the DAO, then you can improve it over time. And I think that's a good point. It's just that I know that some of the people who are skeptical about governance, including myself, might think that a lot of people in governance are maybe not literate, but it's actually true that they understand the rules pretty well. So if you set a system where people can game the system, it's likely that there will be some other actors that game it, right? We already saw, for example, there's this actor called Humpy, and I think he's gonna go to jail. We'll see how it goes. Probably doesn't end well, but he's been notorious for trying to basically wrestle control for Balancer. He also took millions from Compound, and he was able to do that because he was able to play by the rule technically, but he was able to exploit it, right? So if you have a model that I don't think there's such thing as like a silver bullet for everything. But I do think that it's a very interesting experiment. But we just have to be careful on like it should be within certain limits, as Vaughn said, because if not, then relying too much on one thing can also make the system more unstable.
Can I? So I agree. I think you said like prediction markets as oracles. Obviously, token voting is a kind of oracle, right? There's some information that's being brought on chain. So there are all of these types of oracles, and I think this is the thing about prediction markets. They aren't magic. Like if the information doesn't exist, it can't suddenly end up in the price. So I think one of the real problems we have in prediction markets is, weirdly, there's another cost to information coming online and coming into the price. And some of it, I think, is like social stigma, right? Like insider trading is like not only has a social stigma, it has a legal cost, right? And so I think that the question you always have to ask yourself is, if somebody looks at that price, do they have an incentive to sell the information they have? Some people have private information about something. One of the great examples is like hiring futures or like hiring markets. So you have a market over like all the people you might want to hire, and so people can participate in these markets based on whether they think that person's going to produce the thing you want for them. Let's say it's like they're doing events and you want to increase the attendance at events over the next year. You have these hiring markets. They basically predict which person's going to be most successful, and then you hire the person the markets predict. Now, if you have these markets, and today we currently have a block on people going into like new jobs and saying and asking for referrals, and you're not allowed to give them a bad referral, which is you kind of appreciate there's a social like norm there that's good, right? We shouldn't really give people bad referrals and stop them from getting paid. However, you would have an incentive to go and short the hell out of that market, right? And that would be how the information gets into the market. But everybody here could probably see that there might be some stigma about going in and shorting a person's next role in a like a DAO or a product. It just seems terrible. And so I think we have these problems to overcome. I think it's not as simple as like we run a market and they're a perfect oracle. They can only be an oracle so much as we like get the incentives right.
Yeah, and any market where there's kind of domination by insiders can be very tricky in a lot of different ways. I mean, just thinking about the recent public market, right, with the poly market market on the presidential election, there was somebody who was making weird big bets on Trump, and as an observer, you don't know whether that's because he is a rich moron or because he's got inside information. And what he actually did on this market, it seems like, is that he took part in an interview that made him look like a rich moron, but it turns out after the election, he told us he actually had information that he'd commissioned private polls and quite sophisticated polls, so he had information that everybody else didn't have. Now, if you're trying to do this in an organization where you've got some insiders, nobody else knows. If you know there are some insiders in the organization, you don't really know what game they're playing, right? If they're doing something that looks like it's dumb, you want to participate in the market to go against them. Or dumb, and in a prediction market, dumb and malicious are kind of the same, manipulative are kind of the same thing, right? It's the same kind of behavior. But on the other hand, maybe they have inside information that you don't have, and if you don't have that inside information, you should just not play. So it's quite plausible that a lot of organizations will just get into a position where honest, smart players will just not play unless they have inside information.
Yeah, it's a great point. And DAOs are so unique in that so much of the politics are public, and yet so much of the power can be obfuscated and private, right? Random wallets popping up, people digging on Etherscan to see where they got their voting power from, all this. So yeah, it's definitely an exciting and interesting space. I think the only solution to answering the prediction market question might be to create a prediction market for what % of DAO funds are allocated via prediction markets. Maybe spin that one up, Vaughn, on Polymarket, and we can have some fun and see what the industry thinks.
I know how I'm going to bet.
Awesome. Well, we have a couple minutes here left. Maybe time for one question from the audience, if anyone has something. Awesome. All right. Well, thank you guys very much to all the panelists.
Thanks, everyone. Thank you.
Thank you.